disappointment in retail sales, it may be because there has indeed been some spikes in cases locally in various parts of China. So I think that could have potentially deterred people from going out more to spend in restaurants and in shops. And of course, I think the labor market situation there is still uncertain. So if you're a consumer, you probably would want to save more at the moment. I mean, Chinese, they do love to save generally. So I wouldn't be surprised if they're still in a bit of a more cautious mode. In terms of the more durable purchases, I think that could be because of potentially government stimulus. Maybe there were price cuts, the slash in prices that make these more attractive. And, I personally think that the disappointment in retail sales could be more because of people they just don't want to go out to spend, because Chinese people are generally being more cautious of the virus. They just don't want to get caught in the health front.
Just to make the point clearly to our audience, the auto sales number was a positive 12.3%. So it really looks out of whack a little bit with that overall weakness that we're seeing in the retail trends generally. But let's move on. So given that we see this reluctance to go out and spend at the moment, how easy will it be for China to meet its obligations under the trade deal with the United States? What was it they're supposed to spend a combined $200 billion over this year and next to satisfy the trade agreement? How are they going to do that if retail sales are still so weak?
Yeah, first of all, China is already lagging the commitment of buying obligations. So that's the first thing. So that may potentially hinder the trade talks we're going to see on Saturday. And I think a lot of these products being committed to are agricultural products like soybeans. So these are more kind of, consumption for food, the daily necessity for people, for farming, etc. So that part of the commitment could potentially be more fulfilled. But I generally think, the fulfillment of the 200 billion of purchase over this year and the next is probably difficult to achieve. But, there's a clause in the trade one phase deal that if there's an unforeseeable natural disaster or phenomenon, then, China may not commit to this. And I'm sure this pandemic qualifies as one of these unprecedented situations. So that there would be a very difficult talks ahead. And I think that both sides don't want to deviate too much for now, because the economic situation in both countries is certainly not favorable for further derailing of talks.
Yeah, I mean, you've pointed to the current level of stress in the relationship. Is there any reason to adjust positions in portfolios going into the weekend in anticipation that there is the potential for them to go badly wrong? Do you think there's going to be any impact on portfolios from the weekend talks?
So we don't think that the weekend talks will deliver something disastrous for the moment, because as I mentioned, there's still an excuse for China not to meet these commitment purchases because of the pandemic. And I think, there has already been a lot of recent heightening in tension between the two countries, in particular on the technology side. And what we've seen from markets actually is still, despite this geopolitical tension, markets are still making highs in the past week. And so I think, markets are still kind of focusing more on the better data coming out and the progress on the health front, and also the very unprecedented monetary and fiscal stimulus that we're seeing. So first of all, I don't think there will be a disastrous outcome. There will still be room for talking. There will still, they will still kick the can down the road for now on the trade side, because it really will impact the real economy if they do, they can't, if they scale back on the phase one trade deal, or they can't make any progress. So I think that there won't be a disastrous outcome. And secondly, I don't think markets will be too bothered by it, given the recent momentum.